Hello everyone, welcome to this video. I did a live stream earlier. If you've not seen that, go to the live streams and watch that. In this one, we're going to talk again about the euro against the US dollar. Now you've just had that CPI news. So inflation news in the US often helps dictate what's going to go on around the world in various different assets you could be trading. Now what you're seeing now is a little bit of a confusion result. And you're going to get a lot of scalp opportunities on this. I've just been scalping a minute ago, in and out, and I need to get back to it. So I'm going to keep this fairly short. But anyhow, you have a high up here, a low down here, and you can see this looks confusing to a lot of people. And if you swap onto your 5 minute, you're going to get an opportunity to hedge or cover if you need to mitigate any losses you might have, and just hedge around these previous long zones. And you'll probably get a very reactive price around here. Okay, so that's ideal for very small hedges because the price is already quite high. Now you can see the MAs are all married together here. There's a ton of support, so this will probably struggle to come back through, and you can see how much rejection is here as well. Look at it. This is what I'm showing you now is what trading is all about. We can see from the chart what's going on. The euro just wants to push up. You might get another adverse reaction once they say something else in the news. But at this point, you can see, bang, price comes down, it's rejected immediately. It flies back up, okay? And it's got to come back through those previous levels. And the only thing that's going to do it is a strong, quick market sentiment change, okay? Now, in my live stream earlier, you probably would have seen me talk about how I think we'll get through this as we did. And I think we're going to go up to 109 before you get any reasonable risk averse shorts. So the reason for that is because if you zoom out, okay, you look for that bigger picture again, you reach a bit more resistance here. If you are completely risk averse and you're more of an investor, you would be looking higher to these other MAs. And you can see that by the weekly, there's lumps of resistance there. But if we go to the monthly, you can see it a little bit more clearly because it changes the way the chart looks to you. So probably around just after 109, you might get a jitter, okay? And then after that, you can look higher to your 111, okay? Or just after 111. So these are your short zones. I wouldn't be surprised if you get price reaction there due to previous zones, price action zones. But on top of that as well, it's just all about scaling in at reasonable price action areas and in line with the value of the market. If I draw a fib, we're not looking to hit the 50 and bounce away and it will be magic and rainbows. You're just going to have half a normal size because you're half the way of the preceding move. You've got half the value, essentially. So it doesn't make sense to go fully in, but you can if you choose to. But I would more or less keep it risk averse, go for a half size there, and you could have a slightly larger size at around this level here. So you'll come into those other key moving averages and more key resistance. And you can look to the short side. So it's going to be between 1.11 and 1.12. For more risk averse traders, hold off around 1.117 or 8, I would say is going to be ideal. But just to get you to grips with it today, if you look at your lower time frame, you can already see this going on. The price is struggling to break through, and that's because you're coming back to those key support areas you just saw price be rejected from. That's a really important thing. You can trade the reaction to news really easily because you can see price has already been rejected all down here. So therefore, you can infer on the next move that it might happen again, or it's likely. Okay, and that is simply how trading works. Look where price has had a reaction before, plan your trading for it when it comes back, and then trade that move. And you can accumulate these hedge gains here, okay? You could even liquidate anything that you took just before that and just tighten up your risk because you're seeing the market climb and climb and climb and climb. You have to keep the business solvent. You have to trade with the market, okay? I wouldn't be surprised if we do reach up to that 109, but I'm not looking short until I get up there. And it just goes in line with market sentiment and technical levels. So just quickly before I finish this as well, if you're looking long, you would need probably, unless it's a scalp long there, very light, you'd need something considerable to pull you back. 107 area, and then you can start to scale in lightly on the other side. So thanks for watching this, guys. Hope it really helps. Go under this video to get my training, watch my YouTube, and start changing your trading today. See you in the next one.